This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website.
Well, hello, this is Hall Martin with Investor Connect. Today we're here with Derren Burrell, founder and managing partner of Veteran Ventures Capital. Veteran Ventures Capital is a veteran-owned growth equity investment fund and firm focused on veteran businesses. Derren, thank you for joining us.
Oh, it's a pleasure. Appreciate y'all having me, Hall.
Great. So where are you calling from today?
Well, right now we're in Knoxville, Tennessee. That's where we're based out of, and not on the road yet, but getting ready to get that way. So weather's getting better and starting to climb out of the winter doldrums, right?
That's great. So tell us more about your background before creating Veteran Ventures Capital.
Yeah, so appreciate that. My background's pretty straightforward. I did a career in the military, started several decades ago, and served 21 years active duty Air Force. All of it, though, in the financial management career field. So like to say I didn't fly the planes, I just paid for them and had a great time doing it. Managed some large programs, $15 billion in the Pentagon, $12 billion in Iraq and Afghanistan, and just some great opportunities across the globe. Finished up my time in the White House, managing the president's communications budget. And although I just had a great opportunity to transition to the private sector, I had a lot of reasons for making that choice. So came to Knoxville to start the second career, also in the financial industry in the private side this time. Been doing that for about 8 years now. But as I came here and helped businesses grow and scale, I had a heart to stay in the veteran ecosystem. I was part of a veteran-led company, and the company was growing like crazy. We went from a $6 to about a $35 million exit in just a few years. A lot of that was done when I got there. I was a COO of the firm. It doubled in company size and tripled their AUM in just a few short years. But it was through a lot of the military principles that I had learned over the previous couple of decades. So think process management, administration, just the ability, structure and discipline, things that the military does very well that are somewhat absent in small business. And so I found that to be very, very applicable to the private sector. And so the company was growing, and others were that I was helping out too. But I had to raise $2 million in growth equity for this company. And that's where I became firsthand aware that veteran-owned businesses had a disadvantage when it came to access to capital. And that's really what led me to start the idea of Veteran Ventures. And so I got together with a couple of folks, mostly veterans, and said, I think we can raise a fund to help bridge the gap to veteran-owned and veteran-led businesses and really make investors a lot of money, but also help these businesses grow and scale. And so that was about, nearly 4 years ago now. But we did decide to raise a fund during the midst of COVID. And as we finished out the raise just this past year, we've been able to raise a pretty hefty $25 million fund to help just really deploy into veteran businesses. And that's, it's morphed over time. I could tell you about the thesis and why we do it and how we do it and what our value add is, but you're just wanting the intro here. So I'll leave it at that and see if that scratches the itch on my background, because I've been doing it now for a couple of years full time, entering in the third year. And it's been a blast to see the innovation out there.
Well, that's great. That's quite a history there. So tell us what excites you right now.
I'll tell you what excites me is the innovation, the desire, the passion, and the intensity that we see in veteran-owned businesses that are looking for that next level. Because there's two huge forces at play right now. One is the creativity and the innovation that the veteran has when they're trying to develop and scale a business. That's kind of been throughout history, though. You see the Federal Expresses, the Enterprise rental car, you see U-Haul, heck, even Domino's was started by a veteran, right? So there's a lot of precedence there. But today, we see the government pouring billions of dollars into the nation's defense, into high technology, to space, to satellite imagery, to robotics, and drones, all these capabilities. So there's a lot more money there. The education that our military has when they transition out is higher than it's ever been. Lots of great opportunities for the government to pay for advanced degrees. A couple of PhDs on my team that are veterans. And so you have that one component. And then you have the awakening that the government has that really defense needs innovation from private industry. Couple those two things together, and what do you get? We have about 500 companies that pitch us a year that are looking for capital. And a lot of those people are going after governmental incentives and contracts and opportunities of where they did when they were active duty. That's exciting because you have people that have a great business plan, great leadership, because that's what the military gives you. And then you have the ability to take some of these programs that the government has set aside to help these businesses scale further and faster and take advantage of so many different of the current events at play and the dynamic that we're at and just the economic uncertainty that can be bolstered and countercyclical through governmental initiatives. So long story short, I like veterans. I like veteranpreneurs. I like the idea of backing veteranpreneurs. They make a great business case, and that excites me, and it should excite investors as well.
Well, that's great. Well, you work with a lot of veteran-run businesses, and you work with their investors. What's your advice for people investing in veteran-run startups? What do you tell them to do before they write that check?
Yeah, so the age-old, I guess, mantra is true that you are early stage. You're investing in leadership. You're investing in the founder and that personality and that ability for them to get things done. Well, nobody knows about execution better than a veteran. So that's why we think that veterans make better entrepreneurs. So I would tell them to invest in the leadership like you normally would, but do it with someone who has the skill set, that has the ability to perform under pressure, that is used to having razor sharp mission focus, that can adapt and overcome. I mean, we call that pivoting in the business world. Well, that's something that the veteran's been doing their whole career. So you have these different things that you look out for in a regular investment opportunity that I think are amplified. And so I tell them to look at the business case, but look for the veteran as well, who is directing the strategic nature of that company. And that's a winning combination.
Great. And on the other side of that table, what's your advice for veterans running startups? What do you tell them to do before they go out to raise funding?
It's hard. Okay. It's so hard because it was a challenge for us to get this first fund to the goal line and over to the goal line. And so I was a startup just like they were. I was pitching people left and right for years, just like they are. And I got lots of no's just like they do. And so it's a probability game, right? You got to get out there and you got to keep pushing. Don't be discouraged because so many people say that the investment community they ignore me. They come through and they say that. Well, just realize that, we're a small firm and we get 500 deals a year, right? That come across our desk. The larger ones, they're getting thousands a month even. So it's just a small percentage, 1% to 3% of people are going to invest in your company. So you have to have a large denominator there in order for that to make sense. So I see a lot of discouragement in the startup space in general. And so that doesn't just apply to veterans, that applies to any entrepreneur, right? Because it's hard. So I just tell them to keep at it. That's what we do. We have been trained to take that hill no matter what. And that can be hard work. And it's same thing in the private sector too. Just keep pushing.
Well, that's great. Well, the startup world continues to change and evolve. How do you see it evolving from here?
Well, I think we're in a different level setting. It's not 2020 and 2021 valuations anymore. So there's a reality that is starting to hit even some of our portfolio companies that are doing good in the face of economic uncertainty. But there's a reality coming through that capital, which was never really easy to begin with, that got easier during the last couple of years, that is now seeing the pendulum shift right back to the challenging areas that it used to be years ago. And so people have to have a long-term view. Okay, they can't talk about my lofty valuation right now. What they have to do is get the capital they need to survive and to thrive and think long term on how this is going to get through this period of uncertainty, which could last, the next couple of years. And then they'll come out stronger than before if you tighten your belt and you do the right thing and you stay the course. Did that answer your question?
Yes. And I agree. Some people call it the new normal. I call it the old normal. We're simply going back to the way business used to be before the pandemic, where interest rates weren't zero and valuations had to be real. And so I agree, it's a change in the market for sure.
Yeah. And what a better way to do that, though, with those people that have dual use technologies that can help offset some of the uncertainty in the economy by utilizing, government procurement and contracting opportunities. So that's why we like the veterans in the national security and defense space, because they can kind of have these, it's dual use. So it has public and private use, but you get a couple of the government's going to spend more money in periods of uncertainty as opposed to what happens and what we're seeing in the private sector where all these layoffs are occurring. You need to hedge your bets.
Great. And so what do you think is the biggest change we'll see for veteran startup businesses in the coming 2 or 3 years? What trends do you see coming up that may change things?
Well, I think that there is going to be a mindset adjustment in terms of valuation. Okay. Because there is like you said, the old normal is coming back. And a lot of people that have started businesses during COVID never saw that normal, right? They're used to these high multiples. Those multiples are just going to come down. And so people need to be prepping for that because, the people like me that run a fund and that have a set of investor bases, we're in the business of trying to make a return for those folks. And so there's going to be a level setting on both the investor side as well as the entrepreneur side. And so I think that's going to be something that's going to affect the startup ecosystem and also the follow-on opportunities. They're not going to see huge jumps in valuation from one round to the next. I'm not so sure you'll see declines if you price the first round right, but you may not see 100% growth in 1 year, just like you have seen over the last several years. And so I just think the multiples will come down, they'll contract, and we'll see that right now, I think a lot of the businesses that we're seeing, they haven't fully realized that yet. They're coming around. They're maybe not jumping as high as they feel they could. But we're still hearing this is a bargain right now, and it may not be a bargain yet. It may be worth continuing to sharpen the pencil and finding the right valuation to help both you and the investor succeed. I hope that makes sense.
That certainly does. Well, let's talk about your fund in more detail. What exactly is your investment thesis?
Yeah. So what we do is I kind of start off by saying it's like military Shark Tank, right? We have veterans that come in and pitch us. They submit an application. But really what it comes down to is there's a lot of details when it comes to getting access to venture capital, right? What we like to focus on and where our biggest value add is in our experience as veterans in dealing with the governmental bureaucracy when it comes to procurement, contracting, non-dilutive funding like SBIRs and STTRs and the new StratFi and TACFi programs that the government has that help inject non-dilutive funding into companies looking to do business with the government to really get over what they call the valley of death, which is getting involved into government contracting that can sometimes take a while to pay off. Once it's there, it's a very lucrative proposition. It's just getting over that hump. So they have programs to help you do that. So we invest in veteran-owned and veteran-led businesses. That's the bare minimum, okay? But we have specialty with about 80% of our portfolio that's going to be in that national security and defense space. So you think, security, whether that's cybersecurity, data security, physical security, those things, like another subset would be logistics, think distribution, and even those areas like space and aerospace, drone technologies. High technology is where we like to focus. And that's 80% of what we do. And again, what we want to help them do is they have to be post-revenue. Typically, we're in the late seed, early series A. A lot of the companies, as of late, over the last 8 months, they've had about $1 million in revenue when they come to us. And so we invest in them to help them take that from $1 million in revenue to $10 million in revenue and then on up. So still early on in the cycle to where more than likely the liquidation events are going to be mergers and acquisitions. but we try to get in them, find out where their sweet spot is, and then find the right contacts across the federal government, typically in the DoD space as well, and get them opportunities for non-dilutive funding on top of our equity investment. And it's proven pretty lucrative because we've been able to double the equity investments through non-dilutive means year to date.
Great. Can you describe one or two portfolio companies that fit your thesis?
Yeah, so a couple of them. So we've deployed just over $5 million across 11 companies. And what we've seen is I'll go through the last couple that we've done. Phase 4 is a satellite propulsion technology company. And so it's not building the satellites, it's building the engines that help those satellites stay in orbit longer, which helps give them a larger useful life using different fuel than your typical satellites do. So this has got tremendous applicability both in the defense space as where Space Force, Air Force, NASA has a great set of properties that allow it to compete better than some of the other folks in space. So we deployed capital into them. They've since been able to get non-dilutive funding on top of that. It looks like they're going to get another round of that too. But that's what they're doing is they're looking at some of the commercial vendors to help outfit some of those satellite companies that are going up, some of the big names and as well as some of the smaller ones as well. But they're also engaged with the different service components in the military to help bring this technology into the government as well. That's one, phase 4. Another one is NVTS, Night Vision Technology Solutions. So that's a company that does a lot of, really when they came to us, they do this is not the night vision like the night vision goggles. I think it's a little bit bigger, like on Humvees and the displays and the different, it even goes on Navy ships and things like that. They have a lot of sales, but they had them more or less in the international scene because it's so hard to sell to the DoD. So when they came to us, we helped them in getting their service disabled veteran owned status, which qualifies them for certain set asides with the government. We help them and are helping them get registered into the different procurement systems that will allow them to sell back into the government because they've had millions in sales every year. It's just a matter of getting them from a $2 million a year company to $20 million a year, right? So we're helping them traverse those somewhat arduous contracting channels and help get them to the right people, the right program offices, the right conferences in front of the right people to make sure that they know that they are a really good second order part supplier for these type of technologies. So I can keep on going on if you want, but those are just two. And we have, again, just a robotics companies, a drone company, and we're pretty excited about the different technologies that are showing great promise in the private sector, but also have a desire to bring this technology to the DoD that is looking for these types of things.
Great. Well, let's talk about the challenges in this space. What do you see the veteran founders struggling with the most?
There's a couple of ways you could kind of break this down. And it's an interesting dynamic problem. Okay. Part of it is when I could tell you that the first 6 months that I was doing this several years ago, I had to convince people that Veteran Ventures Capital wasn't a nonprofit. Because when I told them what we're doing, we're investing in veterans. They're like, oh, that's so great. You're helping out veterans. And I'm like, no. Look at the history. Look at what they've done over time. I mean, 60% of all CEOs in the 80s I think it was 80% actually, were veterans in some capacity. You had an amazing run of World War II veterans came back and had started businesses at the rate of 50% or higher. All this great stuff, veterans are going to make you money, Mr. Investor. And so that was a little bit of an education because a lot of times when you think of, how are we going to help veterans, it turns into be a nonprofit discussion. And while that's certainly noble, I'm glad that there are organizations out there that are doing that. Those people that need those helps and the transition issues that they come with, that's not the majority of the military. In fact, it's a really small minority. Most of them come out with an incredible skill set, with abilities of the same Fortune 500 CEO. They just don't have the same level playing field. Because you and I know that veteran-owned businesses are 30% less likely to receive venture capital. even though statistically they out-earn their non-veteran counterparts. So there's this arbitrage there, getting in at a reasonable valuation, scaling them up, and seeing that exit event. Well, this is something that there's an education gap there. And so I think that that's something that why that's their biggest limitation right now is access to capital and access to the same networks. While someone was spending 20 years building up their Wall Street contact list, the veteran was out serving their country and defending their nation. So they come out of the service lacking the same networking ability. So we're trying to partner with like firms like ours, building out that ecosystem and making sure that they all have the same types of opportunities and access that some of the more seasoned professionals in the private side for longer periods of time have. So that's a challenge that I think veterans are starting to overcome because we're building out this ecosystem. There are more players in what I do than there ever has been before, and we want to partner with them. And I think that there's a sense there that there's more of a connection in the VC space of veterans than there are maybe in others.
And then what's the challenge the investor faces in working with veteran-based businesses?
Very similar, right? It's this education piece on some of the biggest companies on the planet were started by veterans. Still, there's a problem because it is a challenge to raise money for veteran entrepreneurs, veteran businesses, and although we've traversed it, veteran funds, right? There's probably, there's less than 10 out there that do what we do in the same, well, none of them do it in the same manner, but we do it, but that have that focus on veterans. And so I think that there's an opportunity there, right? Because there's not a lot of people doing what we do, but there's also a challenge there that trying to get folks to see the value there, it's a long-term play. And so it's an opportunity for us to continue to see the different, the $1 billion valuations that come from, ID Me or Black Rifle Coffee with their IPO and the different veteran businesses that are making headways. We need to see more of that because then you know what happens? We see that military service could become the gateway to entrepreneurship. People could see that and say, I want to be like those guys. I better go serve my country. And they get there and they get the skill set, they get the tools, they get the education, the leadership, and they can come out with the same skill set to build these incredibly successful enterprises that are happening right now.
Great. Well, you see a lot of different technologies, business models, and opportunities in the world there. If you could start a business tomorrow, what would that business be based on those new technologies?
Wow, that's a great question. So one of the things that we do at VDC is we look to see where we think the puck is going to be and we skate there to it, right? That's what Wayne Gretzky used to always say is I go to where I think the puck's going to be. So we do that. We try to find out where the government is going to allocate resources because they build a plan 5 years in advance and we see where they're going to be allocating resources for the next 5 years or so. And we see current world events that are going to help accentuate some of those areas. So what I would do is I would see that, I see that there's a huge opportunity in cybersecurity, okay, and building out the defense of the nation's energy grid and safeguarding the new frontier of space and Space Force. So I would probably focus in those two areas in the cyber realm and in the space realm if I was to start a new company right now, because we know that the government is looking for those types of requirements coming to the world.
That's great. So a great new opportunity there. In the last few minutes that we have, what else should we cover that we haven't?
Well, I think the network is growing. And what I would like to say is if you have great opportunities from both the entrepreneurial side, like I said, the ecosystem is growing around us, but we would love to be a part of seeing these companies scale. We obviously can't invest in every one of them, but we still try to help out every business that comes across the desk, right? In some way, shape, or form, building out their network and bringing in a couple more people that may take them, because typically a lot of people pitch when they're not ready for venture capital. They're more or less in the angel investment stage and things like that. So we can help them in those areas. So I would encourage those people to reach out. So you're going to talk about our website and the application process there. But also, as we certainly want to see a fund 2 and a fund 3 and start building out that Rolodex, if you will. So if there's people that want to invest in what we do, by all means, have them also get in contact with us. We're going to see some really nice exits in our first fund, and it's going to set the foundation for future opportunities for investors to get engaged with us.
Well, that's great. So how best for listeners to get back in touch with you?
Well, again, veteranventures.us is the website, and they're more than welcome. There's plenty of contact information from that website. Follow us on LinkedIn. That's our chosen mode of getting the word out on opportunities, on investments, on trends, and just our thought content we publish there pretty routinely, a couple times a week. So those are the two main ways to do that. And I'm certainly happy to talk with folks after listening to the podcast too. I'm sure that they can always get to me through you as well.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you so much. Again, Paul, I appreciate what you're doing, spreading the word about the different opportunities that come across your desk, what you've done, and the amount of, catalyst that you provide to the startup community through 10 Capital is truly, it's noteworthy. And I just really appreciate you allowing us the time here to kind of tell our story. But on the bigger side is that you've done that for so many people, and it's greatly appreciated.
Great. Well, thank you so much for that. And with that, we'll go for now.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.